Jeremy Siegel, who is back with us, and we're so glad to have you, Professor, on this day. You said a couple of weeks ago, quote, "I can't be optimistic until the Fed, shall we say, gets it, and there's no sign they do yet." How do you feel hearing these comments that we've gotten today and what you might hear in the days ahead?
Yeah, I mean, I believe the Fed has already done too much. I voiced that for the last 6 months, that the trajectory was way too high. By the way, speaking about the core, if you actually put real shelter prices in, I mean, from Apartment List, Zillow, or the Case-Shiller number, I've done the calculation. Core has been zero inflation for the last 4 to 5 months. So it really wipes out the core if you use real shelter prices instead of the, as we know, dramatically lagged prices that the Fed is using. So really, core is not a problem. They should have stopped. They shouldn't have raised last time. It looks like they're going to raise again and make an announcement of a pause. I really hope Austin Goolsbee makes a dissent, because there has not been a dissent for over a year at the Fed. Groupthink has reigned, I think, to the detriment of monetary policy and the American economy. And I would like to see another voice actually make a dissent at the meeting. So if they I am awaiting that.
Professor, if they raise in a few weeks' time, what happens to stocks?
Well, I think it depends. I mean, we still have, what, 3 weeks to go of data. I mean, I really think, again, what happened to the banking system and what I see in data on lending falling off the cliff really portends a much bigger decline in economic activity. I am shocked that no one at the Fed has actually cited the reduction in lending that has occurred almost the most in 75 years, actually. We know M2 liquidity last year fell by the most in 85 years. It's falling again this year. The squeeze on liquidity is much greater, believe it or not, on the money supply than we even saw during 2007, 2008. Now, I'm not claiming we're going to have that, because that froze the entire banking system. But what we saw with SVB and the lending standards, I think the Fed should absolutely not raise. What does this mean? The probability of recession has gone up. Listen, I said for the last 2 months, I'm not really optimistic about stock prices in 2023. I hope they go up. They might.
You were, though. But you were. You were until not that long ago. You thought we were going to have a big run.
I think they'll finally get it. So we'll have a recession. Suppose we have a recession. Earnings are down 10%, 12%. You give me a number for a year, year and a half. Then they're going to boom again, 2024, 2025. And I think those are going to be great years. If you look over the trough, I'm still saying don't, even though it might be rough over the next 3-6 months, unless you're very tactical and very short term. I mean, I'm not a seller.